what advice would you give to those who are still new to the whole world of investing, finances, those who perhaps when they hear about stock market, have no clue what you're talking about?
I think now there are more resources now than when I was around, and you can learn a lot just by reading and listening to podcasts and YouTube, and you have a very good channel, Mo. Some of the things that you can do is I wouldn't do nothing. I would say, although you don't understand, there are always people there that are out there to help, and you're there to help, and I'm there to help, and as well, you could always just walk into a bank and just say, I want to do something to save for the future, and at least you'll have get something in place, and that you'll know that your money is being put somewhere that in the future it can grow. And so going to a bank, talking to financial planners, someone like that, they can at least help you get started. And then once you get over that first step of, at least, even if you don't know what you're doing and you have maybe someone is managing your money for you, at that point, you can then start to ask questions, and you can start to read, some basic stuff. And then it's one step at a time. And those first few steps, just the magic of it not being understandable, someone else can simplify that for you and make it a much easier process. Once that's going, then you can start to learn on your own, and then you can go really as far as you want to go. And that opens the whole world for you. But it's really that first step.
And that first step, as you're pointing out, Darwin, is so crucial. Many times we are just maybe too afraid to ask, too afraid to try. But to your point, there are avenues out there that one can get started, perhaps safely and at a smaller scale, and learn by doing. And perhaps that's something that helps us over time as we start seeing how this comes along, how it's going. We start to even have a better assessment of our own risk tolerance, because it's easy to say, yeah, my risk tolerance is high. Oh, I don't mind losing money. But when it actually happens, that's when you really have a full assessment of your risk tolerance.
100%, yeah, and like it can be very intimidating. You've never thought in terms of this, right? And so, for instance, I've walked someone through like good point, understanding your risk tolerance, and then even just how to get an account created. That can be intimidating, and I understand that, and I'd walk people through that. And so there's people that can help you do this, and that first step sometimes can be scary, but it's worth it. It's getting that first step is really important, that we all take that first one.
Agree with you. Darwin, in terms of the stock market, looking into the year that we are in, and the beginning of the year in terms of the performance of the stock market perhaps has not been the best, but I think it's just the reality of the stock market. It can't always go up. It definitely has its ups and downs, the market pullbacks. I think as we are recording this video, NASDAQ, just as an example, I think it's in the double-digit and negative territory of around close to negative 11% year to date. Nonetheless, that's stock market. But I guess the question that I have for you is, what are the sectors in the stock market out of the 11 ones that you're most kind of excited about in the year 2022? So
I have a view that where we are in the stock market is that in 2022, here you're just starting the second quarter here, is that we're in a period where the stock market's going to fall considerably. And I think that it's going to be very similar to 2000. This is being recorded, right? So I'm on the record with this, but I've been on the record with this on Twitter. And that's actually why I started my online social media presence, because I felt that I could help people. But I do feel that we're in for a massive correction, and that in 2020 and 2021, the major indexes went up. It's the fastest growth that we've ever seen in the stock market. And I think it was unnaturally fast and naturally high. And I think those will all pull back. So as far as sectors, it's a bit of a tricky question, just because of where I see the stock market going, but I see like a big drop coming in the indexes. So I'm a buy and hold growth stock investor, and I exited, which I've never done in my investment career before. I exited the market. I was 90% cash, but I dodged the whole growth stock drop. And, that went down, between 50, 70, 80%. And I believe that the major indexes are going to follow. So I think that for me, I'm always going to be focused on growth. That's primarily technology. But I think it's going to be rocky times in the next year, but rocky times is when you get the best prices on your favorite companies. And so I think sort of wherever you are, I think there's going to be excellent buying opportunities in the next year, and possibly two. It depends how long this thing goes. 2000 went, 2 years, 3 years. And I think it'll be similar here. So that's what I'm looking at. And I'm looking at the discounts. It'll be hard for people to see, their saving and their savings accounts go down, but just, steady as she goes. In the long term, it'll go back up. And in the meantime, you'll have some great buying opportunities.
What are your thoughts around some investors who perhaps maybe they are still early on in their investment journey, right? And, as they have some cash on the side, they almost gradually put that money to work to investing, let's say, in index funds. And for some of those, it might be harder even to perhaps know how to time the market. What are your thoughts on that, Darwin?
So for a person who's just starting out, I would say, so first, the biggest danger, the biggest enemy of investment is emotion. And I think that can drive you to make decisions that are not productive and can have lasting long-term impacts. And I learned that lesson, early on, and I've seen it with my own eyes with many, many people. So just something mechanical and continual, and just, whatever X percent goes in every month or whatever frequency you choose, and then it automatically buys into whatever investment vehicle, I think is a safe way to go. So beyond that, so I watch the markets very closely, and I watch a number of indicators, and I've been investing for a couple decades. So my situation might be somewhat different. And so while I might be watching for different things, I think for someone who's starting, that's the way to go. Just mechanical, unemotional, and don't check your stocks every day. Just make sure it's going in and getting invested on whatever investment frequency and cycle that you're on. And when it comes time to retire, decades from now, you'll be glad that you did that.
Do you have any thoughts on, since you brought up the example of more of a mechanical put it and forget it kind of type of investments? There are now, I think even in Canada, we have more and more tools around Robo advisor services that kind of take the guess game out of things. And for novice investors who are not as familiar with which ETF or index fund they have to choose, they kind of do it for them at almost a fraction of a cost, additional cost, but perhaps might be more digestible for someone who's not as familiar. What are your thoughts on those type of platforms?
I think for the vast majority of investors, that type of system that doesn't charge you very much, but just automatically, robotically invest it for you, I think is a good option. And I think it's safe. And I think it gives you the average, which is what I would consider what everyone should be aiming for. For me, it would be a minimum, because I don't think you should ever underperform the market. And then when you do it through a robo advisor and it just goes into some kind of index fund or mutual fund or whatever it is, that's the right step for you. And it gives you something that's steady and gives you exactly the average, and it takes very little out in terms of the fees to you. And so I think that's a great option.